In today's video, we're discussing everything to do with the stock markets, crypto markets, and commodities markets as they enter another period of volatility. We've just had the Nasdaq fall over 2.5% in one day, and it looks like the bears are trying to get control of this market. If they break it under some key pivotal areas in terms of technical analysis, it's going to be on and the bears will get control. So where's that going to be? Stay tuned and find out more in today's video. See you soon, guys. All right, everybody. Well, here begins our market recap for the markets closed 13th of January, 2022. And when we take a look at a heat map here, you will notice that the big FANG stocks were leading the fall, but it wasn't across the board. It was mostly technology that took the brunt, or growth stocks. Microsoft down as much as 4.23%. Tesla back down 6.75%. Some big levels coming up on it soon, which we'll look at today. Apple down 1.9%, and in general, there were some greens, but it certainly wasn't in that tech sector. When we move over to whether we should be concerned in the markets right now, a lot of that comes down to what our expectation is for 2022. We've discussed this idea with the community, and we all pretty much agree that 2022 is going to be a trader's year. And what that means is while investors will still most likely benefit from growth by the end of the year, we will see some volatility, and this is going to mean key zones are going to be broken and corrections may occur. Now, stock price breadth or strength is one of the things that you can sometimes look at, and you'll notice the strength of the overall stocks actually hitting 52-week highs has dropped significantly since the last fall. Since November, we actually went down to almost 0% and then climbed all the way back up to 5%. But this is not healthy in terms of an overall market growth. And that's why we're seeing a bit of a divergence between the different indices. To really illustrate that, let's have a look at the last 24 hours of trade. The Dow Jones down 0.54%, when at the same time, the Nasdaq was down 2.41% at the close, and the S&P 500, led by tech, was down 1.5%. So is this an across-the-board sell-off? The answer is straight away no. Certain sectors are doing okay, but the seasonality or the weakness that's been coming in from tech is not known to be unusual for this period. We're about to hit earnings. Remember to subscribe to the channel because we'll be covering the earnings on stocks as we go through this earnings season, beginning with the banks into the big tech. And this is going to be where some interesting stuff lies. Notice we discussed this week at the start jets. We discussed airplanes and airlines. And in general, I don't actually like this sector for many reasons that many of you out there will know. However, when the good technicals arise, look at what happened in the last session. What looked like a terrible session, IGV, IBB, XLK all down hard. Jets was actually up 2.22%. The utilities was up and other sectors were rotating into. So this is going to be the discussion point of 2022. Managing to recognize sector rotation. In the previous 2 years, many people have just gotten into the market. Many of you probably have, and you've been used to big gains. Huge growth in 2020, 2021, big meme stocks, big hyper growth movements, multiple percentage points per day. It's not necessarily going to be like that in the future. And some of you may agree or disagree, but I'd be liking to hear your comments down below. Do you think 2022 will be more of a trader's year or an investor's year? Let us know. Let's move over to the volatility. We expect volatility. It's already starting to occur, and it may actually jump into a highly volatile time also in February of this year. And a lot of that is led by tech. So you'll notice what happened in the previous session. Technology led the charge down. Why? It's in seasonality weakness. And remember, seasonality is something we do want to be looking at on these charts. You'll notice here the monthly averages over 20 years. February is the worst month for the Nasdaq or the technology sector, negative 1.4%. And January is only 0.1%. March also quite poor. But if you find the right months and you find the right technical analysis with that, it can be quite powerful stuff. The VIX also showing us that we're back into scalping, day trading, and finding those investable levels. It's very difficult to swing trade when you're at the VIX above 20. And one of the reasons why is because the market acts erratically and it moves very quickly. With the VIX moving back above 20, we do know that the bears are trying to get control of the market. And depending on where they manage to close the S&P 500 and Nasdaq at the end of this week, and in fact over the next 2 weeks, is going to be pivotal to whether they are coming back out for the salmon or they go back into hibernation like they've been in for the last 2 years. There probably will be a correction this year, but will it happen this early? Time's going to tell. So VIX here above 20, which does show us that the volatility is back. And of course, we could be getting a little bit fearful in the markets. Other things though that we like to look at when it comes down to fear in markets is some of the other reasons that people think crashes occur. And one of those is looking at the options market. Have we seen an increased level of puts being entered into the system? Well, usually most crashes occur when you get a VIX or a PCC, in this case put call ratio, quite low. You have way more calls than we have puts being opened. And actually we have a increased amount in puts in the last trading session in comparison to calls. We'll take a look at this later on in the video, and I think it's going to help a lot of people to gain an understanding of how the market works. Remember, if there's a huge amount of puts in the market and an astronomical amount of premium to be made there, it's unlikely that the market falls. And usually we actually see lows happening when the puts become such an obscene amount in the markets. When they go really, really high, we usually see the lows being printed very soon after that for markets. It's a good also counter index kind of play when you're looking for those dip purchases. Let's move over to gold and the commodities quickly here. We'll just breeze through these. Gold hasn't done much for us in the last 24 hours. We're still looking for that 1830. People see this as a hedge against, let's say, volatility in the stock markets. It doesn't always work like that. In fact, gold is quite susceptible to the stock market falling as well. But we know 1830 is the key resistance. Look for a breakout past these 2 wicks here. And once that occurs, we should hopefully enter a participation phase up to the 1870 zone. We'll move over to oil. Oil came down to our 4-hour 20 moving average, and it should hopefully bounce off this zone. We're looking for about 85 here on oil from a technical standpoint. It's been a good strong trend here. Weakness will be met by, you would think, buyer demand somewhere around the $80 as well, if it's able to get through this moving average that it's found some dynamic support on. But 85 still looks in the books for oil for now. We'll have to find out whether it can do it. That we'll come back to in the next couple of sessions. Dollar index, big break here, closing below the huge trend line. And you would think, counter to everyone's thought processes of inflation and interest rate hikes and all of those things, the DXY or the dollar index would be going long. It already made the move based on interest rate hikes in quite a few months ago, November, October, those types of months. Now, why does this occur? It happens because we often get that buy the rumor and then sell the fact. And think about the market as packing in price quite a lot over time for this reason. Now that we've closed below the trend line, there could be some further weakness here in the DXY, and any rallies you would think be met by quite a lot of selling. Something like 95.55 or 95.50. There'd be a lot of swing traders looking here on the currency indices to short the dollar index from this level, just purely because it's looking weaker, it's breaking trends, it's breaking consolidation, and in weakening in general. Another thing that's weakening across the board is got to be the stocks. And we did see here Tesla falter at the previous resistance. So we talked about the 1110, 1120 resistance this week. If you want to go back and have a look at some of our previous videos that we've discussed this level in, and we did find resistance here and sold off. Now we expected a sell-off. Maybe it's a little bit more severe than we expected. It's gone down here 6.75% on the day. But when Tesla falls, we've got to expect it to be very, very volatile. Some people have been calling for an inverse head and shoulders, which looks like this: left hand, left shoulder, head, right shoulder, and then a movement above 1200 to trigger further buying. And we do tend to agree here. I think all of us see that when Tesla makes breakouts above these resistances, it tends to fly and FOMO comes in very hard. But that's not where we are right now. So are we at a point of any support or resistance coming into the close? It really comes down to reading each session individually. So here we have the 1020 and of course the 1000. We know in this area there's been strong buying before. It's a psychological level, and you look for time frames such as the 5 minute, 1 minute, 15 minute for day traders and scalpers for turnaround stories, lightning bolts. double bottoms, rallies through the first few hours of the session, and then continuation back up to the resistance. That's what buyers are looking for. For the bears, you're just looking for a straight close underneath 1,000. If that occurs, where do we go? The most logical conclusion is back down to our 900 or even possibly into our trend line. And if you want to have a look at the trend line on Tesla, all you need to do is go through all of the previous lows and you'll notice that it's quite a lot lower. Basically could push us back into the 800, 850 area. So this trend line here that goes back through the previous lows is in play. We used it last time to kind of predict this big move on Tesla. And now we're going to use it again if the market does end up weakening. It's not going to happen yet. And you'll see this when we look at the Nasdaq and the S&P. This still can rally and there still can be buyers in the markets, but the bears are trying to take control. So just be warned, if it gets through 1,000 again, it really could be in for a bit of a sell-off, because at the same time, the Nasdaq is going to be breaching key zones. So we'll see that soon. Speaking of key things, Apple is also often seen as a bit of an indicator of big weakness or strength in the stock market, as it is the biggest stock. You'll notice here we're in a monstrous channel for Apple. This stock's worth $2.81 trillion now. And if we close underneath the low 167, then that will be putting in place what we call the lightning bolt. The peak, the trough, the lower peak, and then, of course, the closure underneath, signaling weakness. Where's the next zone? Well, a lot of people would always take the distance. They would say, okay, this looks like a double top pattern or a channel. They'll take that distance and then they'll extrapolate that out. So from the weakness perspective, that's what you're looking for. From the strength perspective, there are a few things that on the indices could occur. And if that occurs, then we should be looking at a bit of a rally actually into the earnings report. Remember, buy the rumor, sell the fact is quite common here on Apple. So most things are all centered around 167 support. And if you're looking to the buy side, all you're doing is you're really just looking for it to breach this zone. And then once it breaches that zone, it most likely smashes the peaks off as well ahead of earnings. So just all depends on timing. Definitely subscribe to the channel. We'll be watching this every single day. The turnaround could be occurring in the next session, but it does come down to your indices picking and the way that you're actually going to look at the indices and look at the key supports. Just before we get into the indices, let's go through a couple of major kind of companies or ETFs that we've been looking at, sectors, etc. One of them is ARK, and I guess I'm on the record now of saying that I think hypergrowth will have its time in the sun for 2022, but it all comes down to being able to find the recovery play. And what that means is it's similar to Baba. If you looked at Alibaba, if you looked at any of these stocks that have been in heavy declines for a while, you've got to find what we call an accumulation base, a channel, some form of recovery. And there is an art and a skill to that. And hopefully we can see it all together with ARKK at some point this year. We know volumes are up. We know that, of course, it's a hated sector. It was pretty much the worst performing in 2021. And at some point in 2022, these stocks we will think turn around. But it hasn't happened yet. So just remember, there could be more pain to happen here, especially if the Nasdaq gets through the supports. But if it stops at this zone or goes a little bit lower than fully rejects, we might have our makings of the potential of a double bottom. And remember, this could be really great because what would happen is we'd have a low, let's say we wick and go up, another low, we come up, and guess what? At the same point as we hit the resistance, previous support, we'd be hitting a 20 moving average, which has been dynamic resistance. And if we close above, strong movement. That would be a great recovery play. So it all comes down to recognizing it on the charts. And Jets is something similar to this. So we discussed this earlier in the week as a sector that we liked for multiple reasons. There's the double bottom, there's the support, here's the resistance, and here's the breach. And we see that breach occur and now a bit of a rally. In times where the rest of the market is weakening, it looks like this sector is actually starting its first recovery. So we've got the first section of the recovery, and then of course, we've got the second section of the recovery should it get through here. And that's probably only going to happen during earnings season. So there is quite a lot of risk to do with that as well. Let's move over to IWM, the most hated of the indices, I think, on this channel. A lot of people don't like this one, fairly so. It's been moving in a massive sideways action for a while. But one thing about IWM and the small companies is they show us really the strength or weakness in the market overall in terms of whether we should be fearful, truly fearful, or feeling okay. And as long as we hold above these big supports here at 210, we shouldn't fear too much in the markets or be too scared, because if the turnaround does occur, it closes underneath this level, that's bad, mostly because the small cap companies are failing. And it shows that systemic problem through the board. Then we've got that kind of movement out of the small caps that's gone to the big caps, that movement into safety, and then all of a sudden everything drops through. And you'll notice all the indices would go through at a very similar time. So the S&P 500 would also be showing a lot of weakness at the same time as the Russell would be showing weakness. Time will tell. At this stage, still bullish on this, looking for a turnaround above 220. Before that, it's really just kind of taking a guess at an investment level. You're looking for 220 breach. Once that closes, 226, and the really good play is going to come in around 226 purely because it's such a great resistance, and we proofed it using the pattern. So as we know, this is the target should everything occur to the bull side. Let's take a look now from both sides in terms of bulls and bears at the Nasdaq, because this is the discussion that everyone's having in the community right now, and it's, are we about to see a big crash occur? Well, first up, the 2050 moving average, as we did say and we did discuss in the previous session, showed weakness. This was a resistance, 16,000. We didn't quite breach through. We got the long leg doji. As we suspected, as soon as that low was taken out for the day or the trading session, it smashed down. That was the day trade. It was there. It certainly did occur. And now it's come down and closed right around the previous supports and that previous resistance. So are we in a scary point yet? No, not just yet. We've got the peak, we've got the trough, we've got the lower peak in terms of the bear sequence. The lower trough plus the breach of our downtrend would be really the bears clinching it. And this would be the first time, and I'm saying this, if they got underneath, it would be the first time they've done this since September 2020. Let's just think about that. This channel, ascending channel, has been in play now for a long time, well over a year. So we've been using it effectively here on the channel, but the question is, will it hold again? And we don't know that. This is where the bulls and the bears fight it out. We'd hope that the next session is going to be bullish if you're a bull. And why you hope is because it's time. It's now or never, really, isn't it? So what you're looking for is, this is one of those days where you recognize the close, you look at the market and you think, is there opportunity? And this week has been great for day traders. There's been some very predictable moves. So it's one of those ones where you maybe look at the open session, you might check out the 5-minute, 15-minute, whatever your trade system is. We highlighted this one the other day, the lightning bolt that came through and the continuation run. You're really looking for a change of trend on these smaller time frames. And I don't need to tell you guys what to do, but obviously it's all about you having your own system and being able to recognize when these markets are in critical levels that are worthwhile putting the time in on the charts, because sometimes you can be sitting there, no trade. And a lot of people don't recognize certain days are good for trading, certain days aren't. And I think that's one of the journeys that we'll go through together on this channel in 2022. So Nasdaq, interesting zone. Let's look at the SPY, the big one. It hit the resistance early on this week. Fantastic. Long leg doji, movement below. We expected weakness. Similar to the other indices, this is going to be critical. We've got that big channel. We have the weekly 20 moving average we know, which is sitting right here. We've got the monthly S1 pivot as well. And this is where you hope the turnaround again occurs. So the Friday session, we're thinking it's going to be bullish from the perspective of that would be the general gist of the uptrend. But the big thing is going to be watching the first couple of minutes of trade. We want to be watching that first couple of hours, looking at it, seeing the turnaround story, seeing this kind of downtrend getting cracked above. And once that occurs, then you're looking towards that bull side. We do have big news or some news coming out, which we'll look at a little bit later in the video. But yeah, the SPY is doing this. Another thing that we wanted to bring up was our options discussion. We mentioned this at the start. Open interest by strike. Now, a lot of people don't know necessarily why we use it this way. It gives us a bit of a floor in the market for the beginning of the week, the end of the week. into the options expiration, which happens here on the 14th of January. So you'll notice that at the beginning of the week, we had a huge outlier point being at the 460 on the SPY. Now, if we move over to how it looks now with all the options trading coming through, you'll notice that there's just this massive amount of calls that got struck just above this 475, around 475. It's interesting. It's like so many people fall into the trap all the time. This just continued to rise throughout the week, become the most popular call wall here. And there's no way that the market will want to pay off such a massive strike. But you'll also notice that people have been adding in big bear positions, which kind of allows us to be in a limbo area come the end of the close between that 460 and this 475. And again, expectations throughout the week have been a big thing. If you want to get access to these charts, by the way, you can join the free 7-day trial in our Discord below. Join the Discord anyway. Get involved in the community. It's great. There's so many people that share stuff in the public room as well, which we greatly appreciate. And we also jump in there from time to time. But yeah, that movement in between this zone is what we expect. We bring it together with our technical analysis. It just gives us a little bit more insight to whether we're finding the key zones. We don't use this by itself. We used our technical analysis first and foremost, our fundamentals, and this just helps us clarify those areas. Let's move over to the crypto world because it also took a belting in the previous session. We know that we're looking for that 3,600 on Ethereum. It's a big zone, big area. Let's move down into the 2-hour chart now as well and have a look where we are. So we've breached through, closed above, come back down after 2 false breaks or 2 abilities that not get through 3,400. And we're at support. Basically, is where the bulls should be. Resistance, 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 support, looking for the turnaround. Then we should see hopefully a rally, 3,400 plus breaches. 3,600 is the next stop. It's actually a really great zone here, but we do want to see a rally. So you need to watch this on the smaller timeframes if you're a trader. Look for the signs of really some kind of clarity there, and then you can make your own decisions. But it's all about recognizing key zones, then looking for the clarity and the confirmation. It's at the resistance becomes support area. Let's move over to Bitcoin. It's the same thing. Resistance becomes support. Bitcoin went up, got to over 44,000, has come back down, and it's looking for support rally here. If it doesn't get it, it goes underneath. Well, guess what? Back to 40,000, 41K we go. If we get the breach and the movement up, next stop we'd hope is 46. So 46,000 support, 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 support may become resistance. It's most likely 44K becomes the new big pivotal close area. And it's pretty straightforward here on the crypto markets. We know where the key zones are. It looks like most things are around $2,000 apart. And we'll be watching it not only over the next 24 hours, but of course the weekend, because a lot of trade does happen on Bitcoin on weekend dates. Let's think about the news coming into Friday. We've got retail sales, sure to be a little bit volatile at 8:30 a.m. New York time before the market opens. These bits of news will matter a little bit when we're in a highly volatile time. And just remember out there, it's going to be a little bit tough here in the markets just purely because the VIX is up. This year is, in my opinion, again, I want to hear your opinions, whether you think it's going to be a trader or an investor year, possibly going to be a trader year, and we're going to see a lot of sideways, up, down, and all around action. Let's see what happens. Remember to subscribe, and of course, smash that like button if you could, guys. We'll see you in the next one, and we'll catch you next week. Remember, Monday close. We'll be back coming to you with the weekly schedule. See you soon. Bye for now.